anytime soon. And when we'll be joined by the management, it will be interesting to understand whether there's going to be a bit of a bounce back in the rural demand or not. Actually, as we speak, the numbers are out of Dabur. The profitability has come in at 522 crores. That's the first number that we have on our screen. Do remember that obviously the margin is going to be an important bit to watch out for this time around. Given the fact that the input prices had gone up, our expectation of PAT was around 515 crores. So it's come bang in line with expectation as far as Dabur's profitability goes. But what's the commentary regarding the way forward? Has the momentum picked up for demand? That is the biggest driver for some of these FMCG companies going forward. And that is something that the street will watch out for. I'm just going through the numbers and I have the consolidated figure with me. The revenue from operations have come in at 3,355, in line with expectation. We are working with a number of 3,340 thereabouts. And even if you look at the other internals, it looks like a steady set because the other income has been pretty stable. No exceptional item as such. I'm just going to try and find if there is any commentary at this point of time. No, not really. But looks like the street is liking it. Finally, some respite for some of these FMCG companies with the numbers holding up to the expectation. Naresh, a quick word as far as the stock of Dabur is concerned. Anything on the charts?
So technically, the stock looks interesting once it sustains above the 530 mark. That's been the upper band for the stock for the last 3 months. And once that happens, it can make a recovery towards 560, 570 in the short term.
Point taken. So that's the word coming in. But I think Mayuresh is with us. Let's take it across to him before we get the management on board, because we'll take a minute to decipher the numbers. Mayuresh, what's your sense on FMCG, and if you have any thoughts to share on Dabur?
Afternoon, Anisha. No, I think for the pack as a whole, I think is expected to be largely muted, both in terms of discretionary spending patterns that you're probably seeing in urban areas, semi-urban areas. Some respite that you are seeing in rural India, and that should probably show some element of improvement as we head into Q4 and Q1, primarily based on a good Rabi harvest that we probably got. Some elements in terms of increase in MSP prices as well. And therefore, I think rural should make some sort of a comeback in a gradual way. But urban slowdown might still continue, hampering the overall volume growth. Because of that, I think the kind of value growth that will come through might also be a little bit on the sample side. They're obviously introducing a lot more SKUs with lower prices, specifically in urban and semi-urban areas, to probably counter this. In some cases, reducing grammage as well to probably maintain margins. But you will need accelerated spending coming through on ANPs, which will mean margins could remain range-bound or even soft till we head as we head into Q4 as well. So generally, I think for the space, soft. For Dabur in particular, I think numbers bang in line because when you're probably looking at the comparison, that has happened not just on a year-on-year basis, but quarter-on-quarter as well across their business divisions. I think it seems to be a steady state at this juncture. We talk about the consumer care business, the food business, or even the other segments, which is a very minuscule part. But at least for the food business and the consumer care business, the EBIT performance on both these time zones probably been steady.
Absolutely. Mayuri, stay with us. Lots more to analyze. In fact, since we're on the subject of Dabur's numbers, who better than Ankush Jain, the CFO at Dabur India as well, joining in right now to answer all of these questions. Ankush, hi. Good to have you on the show, and good set of numbers actually in line when, all one is talking about a slowdown within the FMCG space. Tell me, what's been your observation on how the rural demand is actually panning out, and if you could give some color on the kind of volume picture and trajectory as well that you've clocked in.
Yeah. First of all, good afternoon, and thanks for having me on the call. And, first of all, in overall context, our overall top line is slightly 3.1% growth, which is slightly ahead of the overall estimate which the market was expecting. And profits or operating margins are also similar, 2.1%. And, this is primarily driven by a couple of factors. One, within India, HPC has grown by 5.5%. And international business has grown by overall 9%, driven by MENA, some very good local performances in Egypt, in Turkey, and in Bangladesh. So overall, it's a mixed bag, while healthcare and beverages has been under some pressure, but other business units have pulled it back to a growth which is slightly higher than the market expectation. Coming back to your rural and urban point, we see over last 3 quarters sequentially, rural is doing better than urban, both for us and for FMCG and overall larger space as well, which to some extent, also augurs well for us because we are high dependent on rural with 45% saliency. And in urban, though there is some pressure because of slight bit of high inflation, both in services and in other food items. But the resurgence of of e-com, the quick-com, etc., will give us a lot more opportunities, especially in doing premiumization, in driving new innovations, driving new formats. So I think over next 1 year, while it's very early to comment, but let's hope let's hope the worst is behind us. But just a bit of caution, while overall inflation is still inching up and expected to be higher in next year than what it was in the current year.
Is inching up, and that's a word of caution, Ankush. But you managed to hold on to your margins much better than street estimates. They were working with 19.5. You've delivered around 20.3. What aided the margins? And going forward, what's the trajectory? Is there a lever available to improve it further?
Yeah, in fact, in this quarter, we did a lot of value creative initiatives. It has been our journey over the last 1 year, which has aided in improved margins, including cost optimization, pack price architecture. We have been working with some of the leading consultants in driving those initiatives, and we also optimized some bit of our spend. Where to play, where to prioritize our resources much better. So a lot of efforts have gone into maintaining them at similar levels despite inflation at an aggregate level for the group at around 5%. Now that's for quarter gone by. But for the future, I think, as I said, I know we have to be a bit cautionary, especially when inflation is inching up in some of the products we consume, and therefore, while we are stepping up our PPA, price architecture, reinventing margin structure or realigning between the alternate channels, and therefore trying to mitigate it. But it will be very early for me to comment about next year. We are in our annual budgeting cycle. We expect to complete it over the next 2 to 3 months, and we're taking the help of a leading, global strategic, consulting advisory firm to carve out a future strategy for us.
I understand that you need to be a bit more cautious, but I want, 2 pointed questions to you. One, directionally speaking, is margin going to be higher or at least sustainable around here? And secondly, could you say with some degree of confidence that urban demand has bottomed out?
Okay, so I think point number 1 in terms of margin, as I said, it's very, very difficult at this point because we are entering into an inflationary cycle. Our intent will be to maintain it, but we have to be very watchful over the next 2 to 3 months. As I said, when we complete our budgeting cycle, loose ends are still being tied up. Pricing, etc., along various categories are being worked. The initiatives are being driven. So it's very early, but if you say it'll be inching up in early next year, it'll be difficult. So I say H1 is going to be a little bit of pressure, especially Q1, which is April to March for us. Q2 we have a soft quarter, and thereabout we have to see. But directionally, we have to be slightly cautious given the high inflation we are entering into from now onwards. And your next point was on...
You can say that the urban demand has bottomed out, and also if you can give a color on the volume growth this quarter.
Yeah, volume growth in the current quarter has been in India around 1%, and which mirrors our overall value growth of 1.5%. While our MRP-led price increases were 3.5%, but because of trade activations and consumer promotions, some of it were given as a pseudo consumer offers, so it went up to 1% overall volume. And in terms of urban, whether it has bottomed out, I think we are very hopeful of this annual budget, which will come on 1st of February, the union budget, and we expect the government should roll out some, definitely some incentives or some boosters, which will not only help rural but also urban. So urban, to a large extent, has bottomed out. But what will drive it in the near future is more quick com, more alternate channels, e-com, etc. And I believe, that's in the long run very good for everyone, because that improved accessibility. You can try new things. People can order anytime, anywhere. It increases broad category consumption. And therefore people like to experiment and innovate, and therefore it will
Right.
help everybody, to increase the penetration, because most of the category penetration are the least to be
Right.
amongst the countries. Yeah.
Right. Well, Ankush, all I can say is that's a consumer speaking, not the CFO of Dabur. But you know what? Just hold on and bear with us. We're going to take a very quick commercial break, but we want to come back to you and, ask more questions. So just stay with us for a short while. Jain, the CFO at Dabur India. Dabur, by the way, the stock has reacted very positively to the inline set of numbers and the commentary. The stock is now sitting at the high point of the day. It's a good 3.5% uptick that you're seeing on the stock right now. But Ankush, thanks for staying with us. What I wanted to talk about also as to how your international businesses are panning out. You did mention as to how markets like Turkey and Bangladesh are looking good. If you could just give us a breakup of, what the volume growth and growth projections thereof are going to be from these markets in particular?
Yeah. So some bit of perspective on the international market. As I said, international market has grown by almost 11.5% in our IBD business, and including SAR by 9% in INR. But overall, it is 19% in constant currency. So which means the local teams are really doing accelerating and gaining market shares in most of the geographies and categories we operate. The Dubai business, the MENA business has grown by almost 16%, and that has been seen after a couple of years, which means there is a lot of traction among most of our brands over there in multiple countries like Dubai, Saudi Arabia, the Middle East, Lower Gulf, etc., and every country. Likewise in Egypt, where we've grown by 55%, backed by almost 11% volume growth as well. However, because of the currency depreciation on a year-on-year basis by 55%, in INR it gets decreased to 2% decline. Having said that, the local currencies are really accelerating the growth in both market shares as well as pricing growth. Hobby, one of our other major markets, has again grown in local currency by 28%, backed by volume growth of 10%. So, we are starting seeing some mid to high single-digit volume growth in some of our critical markets, which is Turkey, Egypt, Middle East, Lower Gulf, even Bangladesh. Despite the political turmoil which we saw in the last couple of quarters, our quarter growth is still 22% in constant currency. Having said that, Nepal got impacted to some extent, but that was only exception at an overall level. So international has started growing good, coupled with both the volume, market share gains, and we are quite optimistic as we enter the new financial year for our international market.
Media headline, Ankush, optimistic about the coming year and international business looking up, and the performance in Bangladesh has been impressive. Thanks so much for staying back and speaking with us on a whole host of subjects, but we're just in the last one